Hi everyone, this is Jason Barrett of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. She's worked on Wall Street for years. She then worked at the Dallas Federal Reserve for 9 years under Richard Fisher. She's the author of Fed Up, Why the Federal Reserve, an insider's take on why the Federal Reserve is bad for America, and she also writes a paid weekly newsletter. Danielle DiMartino Booth, thank you for joining me again.
So happy to be here.
Now, Danielle, I want to get your opinion on President Trump's first 8 months or so. In your opinion, has he done anything you like so far?
Well, it's not that he's done anything I like or dislike. It's been painful to see a man who is so clearly hamstrung by his own party, and I don't think that a lot of us were expecting for that to be the case on the day after the election.
See, I live right outside of Washington, D.C., and I know Republicans hate him. I wouldn't even consider Donald Trump a Republican. I think he just used the Republican nomination. He's really an independent, and so he just used the nomination because he figured it would be easy to get that to steal that nomination from the other weaker candidates like Jeb Bush and others.
Well, I mean, that is very likely the case, and it's patently apparent at this point. But I think that the reason that so many people voted for him is that the country has been screaming for change. Peggy Noonan, in case you haven't seen her latest, wrote a wonderful weekly in the Wall Street Journal about this anxiety in our country and the reason behind the election. And you can say all you want about Donald Trump as a person, but he reflects something that is very real in this country. He reflects a lot of individuals who feel as if the political establishment only serves the people at the very top and has left the bottom rungs and the middle class behind. So again, I'm not going to assassinate his character, but I will tell you that the reason that he rose to the level where he is because there are so many people in this country who feel underrepresented or not represented at all.
Yeah, I agree with that. And the people who voted for Trump, Danielle, at least most of them, I don't think they wanted Trump to be taking advice from three Goldman Sachs, hardcore Democrat, globalist advisors who are basically, going to give a lot of who are not going to care about the middle class. So I think, Trump, he's taking advice from about 8 people, from what I can tell. So 3 Goldman Sachs people, 3 Marine generals who are neocons, and then his daughter and his son-in-law. And the people he's getting advice from, I know Trump's a smart guy, but I think he's been receiving really bad advice.
Well, I mean, look, I'm no great cheerleader for Goldman Sachs running the world, and never have been. But I will say that the media has not been exactly balanced when it has come to covering a lot of these individuals. There was a Twitter storm that was erupted because it was mistakenly reported that Mnuchin had asked for a government transportation to go on his honeymoon, when in fact the guy gave his plane to a serviceman who had just come home on leave, whose own honeymoon commercial flight had been canceled. So look, Jason, this is not a tenable situation, and we all wish that we could bring Ronald Reagan back from the grave, and that our president was surrounded by the most coherent and compassionate advisors that you could possibly conceive. But it's slim pickings these days. It really is. And I think what needs to be done right now, because the anger element that put Trump in office has not gone anywhere. It has not dissipated. If anything, it's gotten worse. We see that in the household debt figures. I hope and pray every day that even if it requires working across the aisle, that something gets done in this country.
And President Trump also donated $1 million of his own money to the Hurricane Harvey relief. So, him and Mnuchin, these stories don't get really covered. They don't get the fair amount of coverage in the mainstream media. I don't like the mainstream media because, they're not fair and balanced at all. Not that I like Fox News either, but, the regular mainstream media is awful as well. I don't consider them journalists at this point because they're not looking for the truth. They're basically political hacks who write, op-eds and editorials disguised as, objective facts, which is unfortunate.
Oh, absolutely. Look, Jason, my second master's degree is in journalism from Columbia University. I am a card-carrying member of the Fourth Estate, and I am as appalled as you are about all of the quote-unquote reporters out there who are basically columnists in drag. I write a weekly column, but it is called, it is for Bloomberg View. It is truly a column, and it's not dressed up to be anything else but my opinion, by the way, backed with data and analysis, and I write a weekly newsletter. But again, I'm providing all sides of the story, which I think it should be an absolute must. I think what has happened in the mainstream media in this country is nothing short of a travesty. And again, it ends up building on this anger element that I continue to revisit because it's not dissipating.
Yeah, I can't tell you how many smart people who have had success in their life and their career that I've had to block on Twitter that were convinced by, New York Times or Washington Post articles that Donald Trump is a Russian spy. So literally dozens of people.
Oh, for heaven's sake. I mean, seriously. When you think about Watergate and so many other wonderful stories that have been covered in the past by the Washington Post, which was run by true journalists, it is a travesty to see a name like that go down in flames. It's a shame.
Yeah, and you have news networks like CNN, which are porting I think 93% of their entire coverage. There's tons of other current events going on in the world, but they spend 93% of their airtime saying negative things about Trump. It's gotten into new Hollywood tabloid stuff level ridiculous. I want to transition now, since we have limited time. I want to transition now and get your thoughts on the Federal Reserve. Stanley Fischer is now resigning early. He was supposed to resign next year. Do you think it's just because of health reasons, or do you think he sees the writing on the wall with the Federal Reserve supposedly reducing its balance sheet, wanting to potentially increase interest rates more, that it's smarter to get out now before another crash?
Well, look, I have tremendous respect for Stanley Fischer. I don't, and I don't say these things lightly. As you know, I wrote an entire book assailing the institution. But I do have tremendous respect for Stan. His term was due up next summer, and I truly don't believe that he would have even been tempted to leave early if it truly wasn't for personal reasons, given the shortness of the remainder of his tenure. My Twitter feed blew up the day that he announced he was going to be resigning early, and the conspiracy theories started to fly. And I did not hit retweet one time. A man of that integrity. I mean, if Mario Draghi was having an existential crisis in the middle of the night before Fischer joined the Federal Reserve, he'd pick up the phone and dial Stan. Same could be said of Ben Bernanke. I don't necessarily agree with all of Fischer's views. I think that his perspective on inflation is flawed because as long as you pile more debt onto the balance sheets of the world's central banks, then you will have a deflationary impetus because it requires money to service all of the debt that's being created worldwide. So I don't necessarily agree with all of his views on monetary policy, but I think he's a man of impeccable, unquestionable integrity.
Do you think Janet Yellen will want to leave early too when her term expires in February of 2018? Because, I mean, why should she risk staying on for the next financial crisis when she could either go back to academia for a high-paying job, she can do what Ben Bernanke is doing and get a lot of money, 6 or 7 figures consulting for a hedge fund, she can go write a book, she can charge $50,000 or more for speaking fees. It just doesn't make a lot of sense for Janet Yellen and Mario Draghi to stay. So I think we're going to see more people like Stanley Fischer leaving early.
Well, it could be the case. I doubt that she leaves early given purely simply the rules that govern what constitutes a quorum at the Federal Reserve. As of October the 13th, with Stan Fischer's departure, if Lael Brainerd and Jerome Powell get on a phone call, because there are only 3 permanent members of the Federal Reserve Board at that moment, then 2 individuals having a meeting would constitute a quorum, and their conversation would have to be recorded for legal purposes. So the Federal Reserve Board will cease to function if anybody else leaves. And I hate to have gotten so deep in the weeds with you, but for pure functionality's sake, I don't think anybody else is walking out that door.
I did not know that. That's very interesting. So President Trump, in my opinion, he has an unprecedented historic chance to remake the Federal Reserve with 4 or potentially 5 open Board of Governors seats, plus a new chairman if Janet Yellen leaves. Do you think he's going to be able to maybe add non-Keynesians in there, maybe more people that are in favor of a gold standard or free market? Because it seems like he's not really trying to put a lot of nominations through. I think he only has 1 nomination at this point, potentially trying to go through, and Gary Cohn is now on the outs too.
He absolutely is. I was actually shocked that Gary Cohn stayed after the Charlottesville events, and he was pretty clear with the on his Financial Times interview that he was sorely tempted to leave, given his religious affiliation. And in a way, you really can't blame the guy, given how badly that was handled by the Trump administration. My greatest concern is that Trump is tempted to go on bended knee and ask Janet Yellen to stay, which goes back to your point, Jason. She's seriously incentivized to go off and do something else with her career that is much more lucrative and much less stressful. So I think the job is Yellen's for the taking. I'm a little intrigued that the Senate has yet to confirm Randy Quarles. His nomination is sitting there. Congress is back in session, so I'm not quite sure what the senators are thinking by not confirming him. Again, one of their staffers has to have explained to them the fine print of what we just talked about, what a quorum is. Somebody has to have told the Senate, look, the Federal Reserve is on thin ice right now in terms of functionality, because there's nobody, it's like last person out the door, turn out the lights kind of a situation. So I would be shocked if Trump was not in the background right now trying to convince Yellen to stay, and if somebody in the White House was not, on the bat phone to the Senate saying, why haven't you confirmed Quarles? So that could take care of some, a situation for him. Will he put non-Keynesians in there? It's anybody's guess at this point. We started this interview, and you mentioned to me that we were 8 months in. I am sorely disappointed in Donald Trump for so far squandering the opportunity to reshape the leadership of the Federal Reserve. Quarles is a good start. He doesn't buy into this lack of discipline in monetary policy making. So I don't know that we would necessarily call him an Austrian, but he's no Keynesian. So Quarles is a good start. I hope that he does get confirmed, but I'd love to see more names thrown out there that are not of the like minds that we've seen since Alan Greenspan took office in August of 1987.
According to my sources, Danielle, and I've lived outside of Washington, D.C. For basically almost 20 years, since the year 2000, I think both political parties and a lot of the bureaucracy are intentionally sabotaging Trump and blocking a lot of his appointees. So, normally with these types of appointees, whether it's Federal Reserve or other Trump appointees, it would take a certain amount of time. Well, these things are being delayed longer to make Trump look as bad as possible. A lot of Trump's domestic agenda plans are being intentionally sabotaged, not only by Democrats, although Trump just did, some type of compromise with Democrats, it's looking like, but the Democrats have sabotaged a lot of Trump's other plans, and so have the regular Republicans too. So he's dealing with a lot of problems. But Trump, as we've discussed in past interviews, Trump ran on the rhetoric. Before the election, he was saying how the Federal Reserve is manipulating interest rates lower. They're creating bubbles in the asset markets with the stock market. Now that he's won the election, it seems reversed. It seems, he wants more spending. They want to eliminate the debt ceiling. We're over $20 trillion already. I think $300 billion just magically appeared on the debt when they raised it over $20 trillion, and he did the compromise with the Democrats for the debt ceiling, and they want to eliminate it. So it seems, Trump does need Yellen. He wants Yellen at this point, and that a lot of the campaign promises he made to the American people, they may end up being basically lies.
Well, I don't know. I mean, look, lie is a nasty word, and I don't know if I would use lie, but I would certainly concur with your observation that it ain't easy to get anything done, and that that there are those out there who would rather sabotage than actually work for the people who put them in office. So, and that is again not their job. I you know I, I think one of the best things that could possibly happen to this country would be term limits. And that's obviously low-hanging intellectual fruit. I'm not really shedding any new light on anything, but I think a lot of these people who are not doing their jobs just to see Donald Trump fail are just as guilty as any corrupt criminal in a third world country. They have been elected to do right by the people, and they're not doing squat.
You're preaching to the choir. I would love term limits as well. I would love for Trump to have fired a lot of the bureaucracy, not just the high-level appointees in government agencies, but actual bureaucrats who are, going on social media, posting how they want to kill Trump, or they hate him and they wish, they wish he was gone or impeached immediately. And these people, are working in key government agencies. I see these posts on Twitter. I see these posts on dating apps for women working in government agencies. The stuff they put on there in a more rational environment where people were doing background checks on them would have gotten them fired. But so it's a hostile environment for him at this point. I was just wondering though, with the debt ceiling at this stage, I think Trump loves cheap debt. He's a leveraged real estate investor, so he knows how to restructure out of bankruptcy and come back. I think he's do you think he's going to be presiding over the next financial crisis then? Do you think he's basically set himself up by taking ownership of this higher stock market that he's now going to be the bag holder?
Look, if he's not presiding over the next financial crisis, that means that Federal Reserve policymakers are correct and that we're going to have the longest expansion in the history of the United States, which I just don't buy. I don't see it happening. So it's not necessarily that he is going to be any kind of a catalyst that brings on a financial crisis, but I don't put a lot of stock in forecasts that suggest that the current recovery that we're in is the strongest in U.S. history. I just don't buy it. And if we do have a recession, given the fact that stocks, commercial real estate, high-end residential real estate, and, oh, by the way, the entire bond market, which is 3 times the size of the global stock market, are at their most overvalued points in history, except for the stock market, which is at its most overvalued since 1999, which shouldn't provide anybody with comfort. So it is the backdrop against which we're seeing economic weakening, much worse than what was expected. And we've barely seen the tip of the iceberg in terms of Harvey-related data that are weaker than expected. I don't think there's any way that if Trump serves out his term, he will not be presiding over the next crisis.
Do you expect, given the hurricanes, the damage we've had with Harvey and Irma added into that the Federal Reserve will be interested in increasing interest rates anymore in 2017?
I place a lot of stock with a fellow by the name of Mohammed El-Arian because I really do think that he is very sober and balanced in his view on what's going to happen with monetary policy. And he might be in better than somebody like, I would be with Federal Reserve policymakers. But he wrote something very interesting on the heels of the Bank of England coming out with a much more hawkish stance than what was expected by the markets, saying that, look, in the September FOMC statement, don't be surprised if you see Fed policymakers saber rattling and suggesting that in December there could be another rate hike. So I was really surprised to see that, especially given, the fact that the Goldman Sachs prediction that the hurricanes would take down economic growth by at least 1% appears to be happening and happening much more quickly than had been expected. So has the Fed ever surprised the markets? No. But could they try and push through a December rate hike? It's anybody's guess at this point, Jason.
And what about quantitative tightening, reducing the Fed's balance sheet? How aggressive do you think they're going to actually, when it comes to action, reduce the balance sheet? Or do you think it's mostly just all talk and they're really not going to do any meaningful reduction of the balance sheet? They're just going to say they're going to do it.
I wrote a column recently that said I wouldn't be surprised if we see negative interest rates before we ever see normalized interest rates. I certainly hope that that is not the case. The idea of negative interest rates gives me the heebie-jeebies. It's just terrible. But my greatest fear is that we're going to veer towards the zero bound and begin to expand the balance sheet before we ever reduce the balance sheet to anything that would constitute normality.
I'm just frustrated because I see that it seems to me that all these large central bankers, whether it's the Federal Reserve, the Bank of Japan, the European Central Banks, it seems they're coordinating Bank of England in there too. Seems that they're coordinating so much of their policies that, one of them's tightening, one of them takes a break. And the amount of money and credit they've created out of thin air since the 2008 financial crisis, over $18 trillion that we know about. The balance sheets, Danielle, of the Bank of Japan and the European Central Bank are now larger than the Federal Reserve's. Did you think that would happen after the 2008 financial crisis? If I would have told you that those things would have happened, would you have been surprised?
Well, I was so jaded and, in the end, cynical by what I personally witnessed inside the Federal Reserve that nothing has surprised me. The hubris of modern-day central bankers is astounding, and I don't use that word lightly. But Lord have mercy, I never thought we'd get to central banks of the world aggregating for $20 trillion in quantitative easing. I mean, this is just, it's historic. It's the largest experiment in monetary policy making in the history of mankind. And it's awful.
I'm fed up with this cronyism, corruption, intervention, and central planning from these central bankers working together.
Oh, look, there's an organization called the Group of 30. Google it at some point. And it will show you that the world central bankers, these are the 30 most powerful economists on planet Earth, and they all belong to this crony group called the Group of 30. I shouldn't necessarily be disparaging of the organization itself, but when you look at the makeup, and when you look at those who belong to this Group of 30, and you see that they're all of the same like minds, you're right. There is a level, at least, of intellectual coordination among the world's central bankers. But again, this is an enormous experiment, and we have no idea what the outcome is going to be.
I want to ask you now about the U.S. and the global pension fund crisis. I know you've been covering this for over a year. We've lately seen, last year you wrote an article about a pension run in Dallas. Lately, we've seen two, I think, CalPERS, smaller pension funds, reduce benefit guarantees by 90%. So you think this problem then is pervasive? And you mentioned earlier in the interview the higher asset prices. So imagine what would happen then to pension fund payouts if asset prices crashed.
Oh, look, this, and it's not just pensions. The more I write about pensions, the more I learn about pensions, the more I realize that when pensions come down because of a correction in the asset markets, it will also take people who have 401ks down with them. And I'm beginning to think that the implications of the downfall of the 401ks of the world will be even worse than that for pensions, simply because they'll be asked not only to have their net worth annihilated, but they'll be called upon to pay higher property taxes and other kinds of taxes to support the pensions after they implode. So these are the things that have the making of true social unrest. It's not just the pension system. It is the implication that goes along with what happens to the rest of us who are not covered by public pensions when we're called upon to cover these massive levels of underfunding.
That's a good point. That's a good point. And in the state of Illinois, only a couple of months ago, we saw the politicians, which it really frustrates me, Danielle. The politicians were like, oh, we can solve this pension fund crisis. We'll just increase taxes 33% on state residents, acting like it was no big deal. Well, if you're a small business owner in Illinois, or you're pretty upper middle class or high net worth, you're probably not going to stand there and take a 33% tax increase. You're probably going to look to maybe move your business to Texas or leave the state.
Oh, look, my two oldest children attend a 6-week camp in the state of Indiana. And I can tell you that this past summer, I witnessed a ton of transplants from Illinois. And it is an untenable situation because you have a shrinking tax base against the backdrop of increasing pension underfunding. This will not work, and it will become, I hate to say it, a federal issue.
So you're thinking bailouts, and I blame, I know a lot of people aren't doing this, but I blame the politicians for making the promises to get the votes that, oh, we're going to guarantee you a high pension in exchange for your vote, when they knew the numbers, the math probably wouldn't work. And it wouldn't be their problem. You know, they'd be long out of office, or they would have already made millions of dollars with their political connections, with their career being a political entrepreneur.
Look, when I see the state, not to pick on Illinois in particular, I happen to think Chicago's a lovely city, but when I see things like the incoming potential new governor in the state of Illinois, who looks to basically turn the place into a socialist state, because they're not going to address the pension situation, and they will have a much worse situation in years to come. But again, I'm just astounded that these people can get elected. And it has to be a case of the only people left in the state are those benefiting from the social safety net that is expanded tremendously. But again, these will become federal issues.
Oh, I'm getting fed up with bailouts.
Well, and we should be getting fed up with bailouts. Absolutely. This is cronyism at its worst. These are promises that should have never been made, and those that have supported them, you are absolutely correct. They'll be long out of office, and it'll be somebody else's problem when it blows up.
Speaking of blowing up, since you live in Texas, I want to ask you about the shale oil bubble. I think, there's been a lot of misallocation of capital there. A lot of these shale oil companies, Danielle, were not even making profits when oil was at $100. So do you think the next couple years that this could potentially be one of those giant economic landmines that explodes and because of leverage and counterparty risk creates another global financial crisis?
Well, look, you're absolutely correct. There was a good bit of misallocation of capital that went into the shale revolution. But by the same token, I am all over national security, the benefits in terms of our national security of becoming energy independent. And what we've seen in the years since the shale boom is that companies have become extraordinarily efficient in terms of the break-even level of the price of a barrel of oil and how much they can get out of the ground for. So are there companies that will continue to blow up because they're over-leveraged? Absolutely. Is the situation in the retail sector potentially worse? I'm beginning to think so. So I don't worry as much about shale as I used to, because the Saudi Arabian gamble did not pay off. And what we ended up doing, and I see this from my prism as a Texan, what the industry ended up doing was just becoming that much more efficient and profitable at a lower price of oil. I'll throw one statistic out there for you. Inbound real estate investing on the part of Saudi Arabia is down 96% year over year, Jason. It's hurting others more than it's hurting us.
I see so many problems in the global economy, Danielle. You brought up the retail sector. If in a lot of the automobile manufacturers in the United States, it looks like they're going to be given a temporary reprieve because about 1 million cars were destroyed in Texas because of Hurricane Harvey. And there was a huge oversupply of cars that American companies had made. So it looks like they're going to be able to sell some of those cars and move them off the lot. But that was another potential, those industries may have needed another bailout. What worries you the most? Is it China? Do you think China is one of the larger problems with their non-performing loan and their banking system? Do you think there's too many what are some of the problems, the largest problems in the global economy right now, since you cover so many things?
You bring up China, and what scares me the most about China is that it's what we don't know. So in the years that preceded the subprime mortgage crisis, I actually wrote the words systemic risk globally as it pertained to subprime bonds. But we saw them. They were visible. They were being traded. They were being traded and identified properly as toxic waste on trading desks, but they were visible. So when it comes to global potential, what scares me the most is that a lot of the potential systemic risk in the Chinese credit markets is not visible. So we can't tell you what a daisy chain would look like. We can just tell you that there's the potential for it, and that we know that through the bond market, this time, this cycle, as opposed to the banking system in the last cycle. But today we know that it is the global bond market where there is tremendous interconnectivity, but we don't know the extent of it. And that's what scares me.
There's so many, I call them economic landmines now, whether it's China, retail sector, subprime auto, the shale oil bubble. I could go on and on about them. Did you see the new article that came out a couple days ago about hedge fund manager Christopher Cole from Artemis Capital? How he says now that there's a leveraged short volatility trade on Wall Street, and he says it's $1.5 trillion of short straddles and other leveraged investments betting that the stock market won't be allowed to crash.
Well, and again, these are the signposts of the last gasp in complacency. As we talk, the VIX is at 10. A lot of it is a very visible short squeeze in volatility because so many rational thinking, logical people are saying, this just can't go on. It can't go on. But every person who piles onto that way of thinking that something's got to give ends up effectively through a short squeeze, validating and pushing the bubble further in complacency as it pertains specifically to volatility.
Yeah, I've been surprised that there really hasn't been that much volatility, but I think a lot of the reasons has been the central bank intervention, that so much money, a lot of capital, whether it's been from China or Japan, a lot of the capital or Europe has come into the United States as compared to other markets.
Absolutely. Without question. Michael Hartnett at Bank of America Merrill Lynch at the beginning of the year said that at the current run rate, that global quantitative easing is at the most aggressive pace in the past decade, including when the Fed was $85 billion a month. So there's more quantitative easing going on today than there was at the height of, here we sit today at the 10-year anniversary of Lehman Brothers blowing up. There's more quantitative easing going on now than there was at the height of the great financial crisis. And of course, it acts as methadone or Prozac and puts us all in a suspended state of reality.
Yeah, the markets are zombie markets. And what you mentioned, Danielle, about the amount of QE from all these different central banks being larger than the $85 billion a month, you would not know that from reading the mainstream financial media. I really don't see many articles about it.
No, there aren't, but it's math. It is simple math, and it will be intriguing to me to see if the Federal Reserve is really going to start to shrink the balance sheet in any way. But it looks like it's going to be an eyedropper full at best, and we're already seeing Mario Draghi backtrack on his threats to begin tapering ECB purchases. And we know that God loved the Bank of Japan, that if they could find anything to buy, they would. But they're running out of things to buy. That's the only reason that their pace of quantitative easing has come back a bit. It's certainly not because of lack of desire.
Those are good points. Yeah, they bought up a lot of stock ETFs too, as well as they basically own almost all the Japanese government bonds at this point. The other thing I want to bring up is the People's Bank of China balance sheet. I mean, we don't know. I don't think they release, an accurate public statement about what's on their balance sheet, and we know that they're going to have to do bailouts in the near future. So those are going to be in the trillions of dollars too. I've seen estimates that it's around 26 trillion RMB worth of bad loans. So that's just a massive number that could potentially have to do a bailout as well.
Look, at least they have the means. We don't.
Well, I don't know if any central bank really has the means, Danielle. So it's because they're all creating money and credit out of thin air. I mean, China's
Oh
been
no,
buying up.
I don't mean that. I just mean they have foreign reserves. I mean that puts us in effectively a weaker position, Jason. That's all I'm saying is that they actually have hard cash in the form of our treasuries, which makes us very vulnerable.
Yeah, yes, they do. But I think they said what $1 trillion invested in hedge funds, and they can't liquidate that capital. I think I've heard that estimate.
Oh, absolutely not. Look, a trillion of the three is earmarked to build the Silk Road. $1 trillion of the three is highly illiquid, which really means that they've only got $1 trillion for another bailout. And if you think about the present value of their last bailout, which was somewhere in the neighborhood of $850 billion, they've really only got enough powder to put out one fire. They've got enough for one bailout, and that's it. And after that point comes and goes, if they have to deploy that $1 trillion to save their economy and prevent complete and total social uprising in the country, then who's going to have the money? And then you really start to worry.
Yeah, I think that's an interesting point. I've heard people in the alternative media for years say that China wants to go to a fully backed 100% gold standard. But, with the games, they're basically Keynesians at the Chinese central bank. And yes, they are accumulating physical gold, but they don't want the restrictions to go on a gold standard. I just don't see it from any of their behavior.
I don't think any developed economy on planet Earth has the means, because of all the debt that's been created over the past generation, to begin to dream about going back on a gold standard. We're just a bridge too far, Jason, and it's a shame.
And I would like to see more independent, before I let you go, Danielle, I would like to see more independent thinkers like Richard Fisher on the Federal Reserve Board of Governors, someone similar to him, maybe younger, who will vote no against the quantitative easing programs. But at this point, Danielle, I'm not sure they would, if Richard Fisher or someone like him tried to go through the Senate confirmation process, I'm not sure they would be approved at this point anymore.
Yeah, it truly remains to be seen. I will go back to what I was saying about Randy Quarles. I'm stunned he's not confirmed. I'm ashamed of our Senate because it's time. It really, really is time. And, who knows what we'll see with the midterm elections next year, but somebody needs to do their job on behalf of the American people. And if you can't get somebody as benign as Randy Quarles confirmed, then you're absolutely right, Jason. What are the odds that we'd have a truly independent thinking, hawkish, non-Keynesian approved to the Federal Reserve Board, kneel to none?
Well, I think, unfortunately, Danielle, with the debt being over $20 trillion already, it's kind of a runaway train. And both mainstream political parties, the Democrats and regular Republicans, are beholden to the large banks on Wall Street, the military-industrial complex. So that's why, foreign policy, whether it's the Democrats or Republicans, doesn't really change. And that's why, the economics of both most mainstream Republicans and Democrats are still basically Keynesian economics, like borrow and spend or tax and spend or some combination of those things.
Well, yeah, I mean, if you had interest rates rise to what we consider to be normalized levels, let's call it a Fed funds rate of 3 or 4%, there'd be no money left over for pork after servicing the nation's debt.
And that's why I think they're not going to allow interest rates to rise. That was just some token. I think they've done 4 token raises this year, and those were back to 1% or so. So those weren't.
Token's a good way of putting it.
Yeah, token interest rate to say all the doubters out there, look, we raised rates, so you're conspiracy theorists if you said we were never going to be able to raise rates again.
Yeah, well, it took 5 years for a quarter-point rate hike, so let's keep this in context, people.
Exactly. Well, Danielle, you are a wealth of information. I want to thank you again for your time today. And if our listeners want to check out your newsletter and your books, how do they do so?
Go to DiMartinoBooth.com, and I am delighted to put you on a trial subscription so that you can get a flavor for the newsletter. Follow me. I have a weekly column on Bloomberg View as well. And as you know, Jason, my Twitter feed is never boring. So follow me at DiMartinoBooth.
And neither are your articles. You use a lot of great analogies to take more complicated financial terms and explain them to regular everyday people who don't have a financial or economics background.
That's my weapon of mass destruction. I decomplicate things that economists try to make overly complicated.
Let's not joke about WMDs now with what we have with North Korea. So.
Oh, good point. Yes, indeed. Yes, indeed.
It's not. I love to be politically incorrect, but there's some sensitive people out there, a lot of snowflakes. So.
Absolutely.
Wall Street for Main Street needs your help. Since the middle of 2016, YouTube continues to increasingly censor and sabotage the growth and success of my channel with dramatically slower or no subscriber growth, a huge decrease in views per month compared to 2016, and well over $10,000 lost in Google AdSense revenues the last 18 months. I should have been way over 20,000 subscribers and way over 3 million views last year, but it feels like I am Sisyphus trying to roll a heavier boulder with more and more additional weight up a steeper and steeper hill. In the last few weeks, all of my videos have been set to demonetization by default, and I have to manually protest each video. This is in addition to even lower than usual Google AdSense revenues after the adpocalypse started over a year ago for me. This has also affected my ability to get paid advertisers to agree to deals not involving YouTube, as I lost $3,000 per month in paid advertising deals at the end of June 2017 because all my analytics are down a lot thanks to YouTube censorship algorithms that have intentionally kneecapped the growth of my channel. With YouTube/Google/Alphabet /Don't Be Evil strongly considering demonetizing or setting all libertarian, conservative, or pro-Trump content to private to prevent any sharing or monetization, it is imperative I have a contingency plan to figure out how to make a living off my content. Each 30 to 40 minute video takes a few hours of my time before it's released to the public. There's a strong possibility that in the near future, YouTube will force me to move all or almost all my content to a new video upload website that allows free speech or behind a paywall on my own website. Thanks if you have already made a one-time or recurring monthly donation, and thanks in advance for any future donations as I decide the future of my channel and what to do with my content going forward. We accept one-time donations on the Wall Street for Main Street website via PayPal, Bitcoin, or Gold Money. You can also become a monthly Patreon contributor for $1 or more a month if you want to help me out. And don't forget to like each video on YouTube and share it with your friends and family if you think they would like the content.